Hey folks, Dan Frio here with your opening bell. So we saw mortgage rates ease quite a bit yesterday, and even on the 30-year fixed over on the FHA, you saw that down almost 0.25%. So what can we expect today? So one thing I apologize about last night's audio on the recording or the video that I showed, the interview, it was a little distorted, so I'll try to work on that today. But in the news that we have today is right through here, and this is going to make a lot of people's heads explode. Home prices continue to go up in value. So people have been saying home prices are going to crash for, I think it's 4 years now. So let's get over to the details. Right through here, here's the economic calendar for today. We have building permits, and they're kind of steady at 1.4 million. I'm not really quite sure if that's enough actually to satisfy the appetite of home buyers. But let's get over to the home prices. Remember, people said that this year's finally, it's caught up to us, all the collections and everything else. This year is going to be worse than 2008, maybe worse than ever. So let's go through this and see how this year fared. So starting in May, we had home prices up 7.4% all the way up through now. Yes, they're deteriorating right now. Right now, they're only up 5.2% so far this year, but this is a far cry from the debacle we had in 2008 that people keep scaring you about. So I also posted in a video last night. There's a young man who does videos, and he has about 2.4 million viewers. And he also had a take on the crashing. So check those out. It's pretty intriguing. So let's get over to the news for today. Like I said, you go through here. The rest of the stuff is basically consumer confidence. Tomorrow is the day that we really get the data that we're looking for and the Federal Reserve's looking for. It's jobs numbers and the PCE. This is the number one inflation figure that the Federal Reserve monitors. So tomorrow's going to be a big day when it comes to news. So let's get over to the MBS market right now. The MBSs, they gave back 5 ticks, which is really not much of anything. We're up about 50 yesterday. So if you're new to the channel, what we follow here is the bond prices on mortgages, because this is really the biggest thing, or the only thing you should watch if you're really trying to figure out where mortgage rates are going. So now the dilemma for the government or the economy, I guess, is tariffs versus DOGE. Remember DOGE? This is right over through here. Elon Musk. Him and Ramaswamy, they're creating this foundation of DOGE, and a lot of experts are putting their 2 cents in right now. And it says, will the Elon Musk lead DOGE to be a blunder or a blessing for housing? Experts lean on the positive scenario of this. And then if you go down through here, there's some nice comments about how they're going to hopefully clean up Washington and a lot of the billings that we have. And then right over here, we have Trump vows to add an additional 10% tariffs and China 25% on Canada and Mexico. So we'll see how this plays out. But again, his Secretary of State or Secretary of the Treasury that he picked yesterday has really a bead in on how tariffs work and how to implement them with the least amount of repercussions on the United States. So let's get over to this headline right through here. Here's what we're going to talk about: Trump's picks and what they mean to the economy, and especially with the Treasury market and the national debt that we face right now. So let's check this interview, and then when we come back, I'll give you a little bit more information on where we're going from here.
And joining us with his thoughts on the pick, Raymond James Washington Policy Managing Director Ed Mills. So what is realistic, Ed, to expect from this Treasury Secretary pick, specifically on tariffs? Because USTR and Commerce also has a very big role to play here when it comes to rolling them out, these kind of policies.
Sarah, when I look back to Trump 1.0, he employed a team of rivals. So with Scott Bessent as Treasury Secretary, this is someone that is going to push for the layering in of tariffs versus the aggressive push that we absolutely expect from folks like Commerce Secretary nominee Howard Lutnick. We would look for him to be negotiating directly with Congress on the upcoming tax bill to give the president new authority to make sure there's reciprocal tariffs in place for the president. And so as he's negotiating that with the Hill, he can turn to President Trump and say, look, make sure we have all of the positive economic aspects of our agenda in place before we implement all of the tariff policies.
Okay, I want to stop there, though. Debt limit expires January 1st of 2025. So what they're going to need to do is, because the national debt is so high, they're going to have to ask for additional a higher credit limit, I guess is the best way to put in that sense. And then the tax cuts that Trump put in now are going to set to expire in December. So we'll see how that goes and then kind of go from there. So I just wanted to point out some of these big things, because we also have coming in January, remember the port strike That was a huge issue back right before the election. Well, they kicked the can on that one. They did a short-term settlement, and now that's coming to fruition again in January. So we're going to see how a lot of these kind of pan out. But let's get back to the interview.
That will be a offset to kind of what we're doing across the board here, Sarah.
And you think the tax policy is chief among that, lower corporate taxes?
Well, I don't know if it's necessarily lower corporate taxes. What I look at, Sarah, is that the tax extension next year is really expensive. Estimates are just keeping current law is about $4.6 trillion. And so Congress is going to look for a pay for. One of those pay fors is going to be tariffs across the board. That is just a blunt instrument. But to the extent that you can have a surgical approach that is given to the president that could open up new free trade agreements, open up new markets to U.S. Businesses, that would be hugely positive to the U.S. economy, to GDP growth, and the market would absolutely cheer that on. But you do need new legislative authority for the president to accomplish what folks like Scott Bessent want to do.
Yeah, I mean, there is a lot of talk from this administration and from some of these picks about deficit reduction. The three plan that he has, the 3 arrows that he's talked about here, the fact that there's this Department of Government Efficiency from Elon Musk and Vivek Ramaswamy. What's realistic in terms of expectations that investors should have here?
Yeah, so Sarah, at Raymond James, we've been talking about how do we balance off some of the positives, how do we balance off some of the risks here. So Scott Bessent's 3 arrows, 3% real GDP growth, cutting the deficit down to 3% of GDP. It's been hovering closer to 10%. How do we get there? Is it through economic growth, the deregulatory agenda, or is it the DOGE cuts that Elon Musk and Ramaswamy want to do? To the extent it's the cuts, those industries, defense, government services, that's where you'd see that market volatility. Where it's growth, that's across the board, generally pretty positive. The final thing is 3 million barrels of additional oil exploration here in the United States daily. That's something that will need deregulation, permitting reform to achieve. I think that's actually low-hanging fruit for the next Congress. Where we could see more volatility is the fact, as you mentioned, there is the rise of the deficit hawks. We want to see who he chooses for the NEC chair. Does Kevin Warsh, another deficit hawk, come into this administration? And is there a collision course between the way in which these individuals want to pursue government change versus what we saw under Trump 1.0, who certainly was not a deficit hawk during his first term?
So we will see how all this plays out. Right over here, let's get over to the CME FedWatch tool. I didn't pull it up yet this morning, so let's see how this is faring. So in 22 days, the Federal Reserve is going to meet once again. What is the expectations that they're going to do? So this is what this does. So just Google the FedWatch, and what it's going to tell us is what's the probability that the Federal Reserve will cut rates at the next meeting. So let's get over to here. Now we are at basically a 60-40 split on what they're going to do. So just to put this in a context, right across the top through here, this tells us the federal funds rate. Right now it is 4.5 to 4.75. So you're seeing it in that column. These dates over here, these are the dates that the Federal Reserve will meet throughout the next year. And then this is the probability of where they're going to put the federal funds rate. So right now it's saying there's a 59% chance the federal funds rate at the next meeting will be 4.25 to 4.5. That means they would cut 0.25%. But this is changing daily, so we'll watch that. But in the January meeting, there's a little bit over an 80% chance that they'll cut. So between the next meeting in December or January, they'll most likely be cutting rates once again, and we'll see how that plays out. So my name is Dan Frio. Who am I? What do I do? I'm a mortgage loan officer, folks. So if you're out there needing help with or assistance with a home loan, reach out to me. And here's why. I'm licensed all 50 states as well as Puerto Rico, so there's no excuse really to use us. I work at ServBank. ServBank's the number 10 largest mortgage servicer in the whole country, plus we're a huge mortgage brokerage set up with over 50 different lenders at this time. So by using me, it gives you this. It's one application, one credit pool, and we're going to shop your loans at 50 different places. Who else can do that for you? So check out the rateupdate.com. Here's our website. You can get the apply now button right through here if you want to check some grants, see if there's any grants available for you, to see if there's maybe some free money out there. Or you can actually schedule a consultation, a one-on-one consultation with me or one of my staff. So that's my report for today. Here's where rates are. Let's see how these go or fare for the day. I'll be back at the closing bell to let you guys know how this all turns out for the day. Thanks for watching. Take care God bless. See you later today.